Ladies and gentlemen, I welcome you here in Munich at the precious metal investor fair called Edelmetallmesse. We have been here for many years, and today I am actually talking with Cathy, Zhai, the CEO of Monument Mining, a gold producer in Malaysia. And we have working together since 10 years, and it has been an extremely exciting company when it started in 2009 as a gold producer with a small mine in Malaysia called Selinsing. The management team has built a quite substantial gold operation there, and over the last 10 years the company has produced a couple of thousand ounces to get in excess of 350 million in revenues, and made a lot of money during that time. All of a sudden that money was on the bank account already and was spent in additional assets the company has bought into some years ago, and we would like to talk with Cathy why the company has suffered a little bit the last 5 years, what was the reason, and what will be the strategy to go forward with those assets to generate again more shareholder value, especially in this market environment. Hi Cathy, welcome to Munich. I'm glad that you are here at the AXINO booth. And as I said, we have been extremely successful the first 5 years working together, and the last 5 years have been a little bit more challenge for us, and especially the gold operation has decreased. And if you could explain what was the reason, and especially what is the decision we can make and do to get more shareholder value in 2016 or 2018.
Thank you, Wolfgang. And I'm CFO of Monument. I have been working, start this Selinsing operation since get-go from 2007. And 2017 is 10 years anniversary of Monument as a gold producer.
Cathy, what was the reason why the company couldn't produce as many ounces the last 2 years as it has done before?
Okay, since we started the Selinsing gold mine, we had a total 230,000 ounces as reserves, and over past 7 years of production, we mined a total 260,000 ounces successfully at a low cost. However, we are, get to the point the oxide materials is going to be running out, and we spend the cash generated from our oxide operation to develop the new increased gold inventory for explorations, for acquisition of our second operation site in West Australia to diversify our operating risk, a single cash flow risk, and country's risk. So as a result, this year, last December, we have replaced the gold inventory by up to 279,000 ounces for 6 years life of mine, and we also complete a study and the development of the Macathara, Banakara mine that's ready for a early stage production. In the meantime, we also acquired a Mangapure property, which is polymetallic, has a very large long-term potential upside down the road. So we built up a pretty strong the gold portfolio as well as the base metal portfolio.
Thank you, Cathy. You have already touched all the three assets of the company, but let's focus a little bit on the gold mine in Malaysia, the Selinsing gold mine. We have produced low-grade stockpile and waste over the last 2 years before trending into this sulphide operation. But Cathy, there are additional ounces potentially in Block 7 land package we have bought in recently, and in your annual report you have demonstrated that there is in the northern part of the whole district an additional asset called Peranggih, which has maybe hosting also some gold in it. Could you comment on that, please?
Yes. The monument started to work on Block 7 at FELDA land. And the acquisition process take a longer time than expected. However, the acquisition has been closed at the beginning of this fiscal year. Now we prepare the Block 7 and we've already put it into the production. So that's going to be expectively increase our gold production through our current processing plant. And also in the north, at the north of Buffalo Reef, we have a tenement called Peranggih. We have been working at Peranggih from time to time in past 2 or 3 years, and that has we have found is a good potential to lift up our oxide gold inventory that has nuggets effects, and you can visibly, see the gold in there, and it has passed illegal mining operation on the Peranggih site. So we progressively work on the Peranggih through our channel sampling and maybe bulk test work, trying to define the resources and put it, if the resource has been defined, we'll put it into production. That can be potentially increase our oxide gold production.
Okay, that's a good explanation and summary, but Cathy, can your investors and your shareholders expect a better gold grade from Peranggih and from the FELDA land? What grade do you expect, and what kind of ounces can you produce in 2018, in the calendar year 2018?
I cannot comment on Peranggih yet. It is still at early stage, but we have a very high expectation. We can get some good result, through some samples we currently have. And at the FELDA land, for the rest of the oxide production, we can expect, somewhere about above 1 gram, between 1 gram to 2 grams on the FELDA Block 7 operation. However, we may, we still have some super low grade stockpile. And so we may, from time to time, put it into the mill as well.
Okay, so in other words, we could blend it, but your shareholders can expect a better gold production next year, right? Because there are still oxide ounces, which we can use in the existing plant, but the grade will go up, and it's not a super low grade as we have done the last 12 and 18 months.
That's correct. We're expecting 2018's production would be have some good improvement. So that can continue for another, I would say, about 1 or 2 years, depends on what has been defined at Peranggih. And we do think that is a potential very good system, and it's oxide, it's a shallow operation, very higher grade and lower cost, very easy, maybe free digging in lots of areas.
So in other words, within the next 12 to 24 months, we have to build the sulphide plant, the bio-leach plant, to get the sulphide ounces treated through that additional circuit we have to add, and we need the money for it, right? We need maybe 40 million for it. Is that a game plan? And do you think that could work out, that we can replace then the operation and the produced ounces with the sulphide plant?
That's correct. The monument strategy is built is a potential success on its current foundations that include a Selinsing project and Murchison project. Our priority is to put Murchison Banakara mine into early stage production, generate a second cash flow. And secondly, we are study, we have concluded BIOX process for the treatment for treating the sulphide materials at the Selinsing mine. We progressively doing the front-end engineering design and internal definitive feasibility study. It's going to deliver an execution plan to construct the sulphide plant. So we expect to complete this study in early of 2018, and it's going to take 12 or 18 months to complete construction. By then, we're expecting to put sulphide into production for at least 6 years life of mine.
Okay, that means if we could get funding into the company, we would first bring the Murchison gold mine into production, and later on then put the sulphide plant into production, right?
That's right. So we can, if we can get to the mine site both into the production at the same time, we can generate a much stronger cash flow for 5 or 6 years without any further exploration. However, in past years, through our development and exploration, we have targeted and found a large potential and a ground mining potential for both Selinsing project and a Banakara project.
Okay, and what about the polymetallic acid, which hosts a big cap of iron ore, and underneath it's a pretty substantial copper deposit. Is that something you want to start also next year, and what is the game plan with Mangapur?
So Mangapur is a large scale potential polymetallic base metal projects. And first of all, we want to do a intake test work. We have come up with agreement with Intech, and we're going to do the test work on the copper sulphide, trying to produce a copper metal oxide. And Malaysia has a huge market to absorb the copper metal, so that's we have a large market for it. So that is our we got to do the test work, and after that we can come up with a development plan. And if we've been successful, we can potentially get a 10 years tax-free for that project.
So that would be wonderful. I mean, 10-year tax break, it's a lot of money. But to explain a little bit the Intech technology, it's technology out of Australia, a company which has used that in an operation, in a copper operation plant in Tasmania. So it's a proven concept. So the company has to do some test work on it with the copper deposit at Mangapur. And if that works, then the potential to produce LME grade copper is quite likely. Important to know is LME grade copper is much more interesting than copper cathode, because then you need a smelter, and most of your margin is going to the smelter. In Monument's case, you can produce the metal directly and sell the metal in country, so that's even more excited and attractive, and to achieve a better margin. So Cathy, thank you very much for this interview. I hope we will have exciting 2018. Any comments and remarks on, for your shareholders as a summary?
I like to take this opportunity to thank our shareholders for years of a strong support, and our team will try very hard. We're confident we're going to successfully build up 2 multiple site cash flow operations, and we want to push it very hard to get to the point we can dividends our shareholders and reward their years of support.
Thank you very much, Cathy. That's what we want to hear, reward the shareholders. We have a lot of European and German shareholders for a long time, and I think next year will be exciting, and a start and a kickoff to deliver Monument 2.0. I'm confident the company is well experienced as a mine operator, and if we have the money together, we can deliver a lot of shareholder value. Thanks a lot.